This is the February update to my InvestEngine portfolio, the portfolio in which I do not time the market and show you how dollar cost averaging and investing consistently is probably the best way to build long-term wealth. Dollar cost averaging is the practice of consistently investing regular amounts of money at regular time intervals. For example, whenever you are paid at the end of the month, you allocate that certain amount every month at that same time. By regularly investing when the markets are up and when the markets are down, you can buy shares when they are at a lower price, meaning that you can reduce the overall cost per share. If you'd like to sign up to InvestEngine, use the link in the description down below. So the current balance of my InvestEngine portfolio is £996, and for the first time it's very close to £1,000. Actually, over the past month I have seen it creep over £1,000, but currently as it stands, not quite there. We can see that overall my portfolio has gained me £21 in positive return, and in this video I'm going to go through the different portfolio cards that I have that I've invested into a mix of different ETFs, which are pretty much just consisting of 3 main ETFs. As you can see, I have zero cash at the moment. This is because as soon as I get cash, I reinvest that cash into some of my ETFs, and InvestEngine makes it really easy to invest very small amounts back into the portfolio. So the first portfolio I have is the VUSA VJPN, which is a mixture between the S&P 500 from Vanguard and the FTSE Japan from also Vanguard. Since starting this portfolio, I am up by 7.59%, which is not bad at all, and I have a positive return of £12.77. So when I made this portfolio, as you can see from this number here, /80%, so the ratio was 80% S&P 500 and 20% FTSE Japan. However, you can easily just override this. Very simple to do. You can just go into the ETF and then press buy and sell and just put in how much you want. So I, as a bit more of a manual investor, do like to just go in and see what ETF is a good price whenever I do get my money to invest in InvestEngine. However, the simple thing to do would just press invest, and then however much you have that month, let's say it's £20, it will invest in the allocated ratio of 80-20, and literally no other worries to do about that. So over the past month, during most of January and half of February, we can see that the stock market was doing incredibly well with a great upsurge seen here, and everyone and their cats were talking about how well the stock market was doing and how their portfolios were flying. And since then we have witnessed a slight dip, but that is everything to do with investing. Sometimes the stock market's going to be up, sometimes it's going to be down, and that is why dollar cost averaging is your best friend for investing in the long term. So within this portfolio, I currently have 1.4 shares of the VUSA, and I also have 3.9 shares of the FTSE Japan. What I do like about InvestEngine is that it makes it very easy to see all the information points at a glance. It also tells you the maximum and minimum that it has on the recorded dates, so it actually has data from all the way back in 2016, which is really good to see because InvestEngine wasn't out back then. Also, if you do want to see all the transactions, you can go into transactions and you can see all the dividends that have come in for that portfolio. So if this account is not in an ISA and you need to do your tax returns, it's very easy to actually see where your dividends have come in. So the second portfolio I have is a mix between the VUSA and the VJER, which is basically the Germany all cap, meaning the top contenders in the stock market of Germany. Now, many of you would probably prefer to have just one portfolio and have a different mixture of ETFs. However, I like the extra control that it does provide, having separate portfolios within your portfolio, and it just gives me more options about how I want to invest my money. So in the second portfolio, my balance is £89.82, and I have a split between the S&P 500 and the Germany all cap. And as you can see, this portfolio is a 95-5 split between S&P 500 and the German DAX. However, I've overwritten this again and it's pretty much 52-48% split. What you can also do is go into the analytics, and it will tell you the regions that the ETFs are invested into, the sectors, the holdings, and the asset classes. Next is my biggest portfolio that I have within InvestEngine, and that is the other day when I invested £400 into the GSPX, which is the S&P 500 provided by iShares, and you can see already I have gained 4.71%. So this portfolio is very simple. It's just one fund that I'm going to keep periodically just investing in, because I think over the long term this is the one fund that I really do want to keep investing into. As you can see, this is the performance of the fund from the past few years, and the GSPX is basically the S&P 500 in correlation with the actual S&P 500 from the US, so there is hedging between the pound and the dollar. And lastly, I have a fund consisting just of the German DAX, in other words the Vanguard Germany all cap. So I have already shown you that I have this fund mixed with the S&P 500. However, I wanted to create its own fund too, so InvestEngine gives you that control over doing that too. And since investing, unfortunately, it is down by 1.54%, 1.4%, meaning that if I continue to dollar cost average, I'm going to be buying it at 1.5% cheaper compared to today. And in the long term, that should, in theory, build my wealth as the stock market goes up, the stock market goes down. We just consistently buy whenever we have spare cash to invest. Another feature that you can have is auto invest. You can set up monthly top-ups and you can auto invest the dividends also by pressing this. If you'd like to sign up to InvestEngine, use the link in the description down below. So make sure to check out some of my other videos and I will see you in the next video.